I'm back. Hey, it's me, Tiffany, the budget minister, your favorite financial educator, and we're back here at Money Club from Yahoo Finance, where I help you get good with your money, honey. You see what I did there? Yes, I help you with the misunderstandings that you might have about money. And we are talking about something juicy today, building wealth. Can you do it? How do you do it? Do you need help? Should you build wealth through the stock market or through real estate? Can you do both? Is it either or? So many questions. I'm going to help you with the answers. Let's jump in. Here's the thing. We're often told that one of the number one ways that we can build wealth is through home ownership. But I don't know about that, because at 25, I bought a condo for $220 and I lost that condo because it went down to being worth $150. So I just don't know if that is true. In fact, a survey from Citibank found that 84% of current homeowners agree that owning a home is still one of the best ways to build wealth, but with nearly half of U.S. households unable to afford a $250,000 home. So which is true? Let's take a deeper dive. Here's the thing, we don't have to figure this out by ourselves. We have an expert in the studio today, Stacey Tisdale. She's a financial journalist and a financial behavior expert. Yes, those people exist. Stacey's gonna help us navigate the ways to build wealth. Real estate, the stock market. Let's see what Stacey has to say. And we are here with my homie, my girl, the woman, Stacey Tisdale. She is a financial behaviorist and a financial journalist. You know you've seen her, okay? Stacey is just super amazing. And I wanted her to come here today to talk about wealth building. What is it really? Can you build wealth through the market? Can you build wealth through real estate? Which is better? So Stacey's in the classroom today to kind of break down.
I am in class.
Yes. So let's just start from like the nitty gritty of it all. What exactly is wealth building?
It's going to be its own definition for everybody. Mm-hmm. And that's what I want people to really get a handle on. We spend so much time and so much effort and so much of our lives often chasing what's been defined for us as wealthy. Mm-hmm. From, images we get about how we're supposed to live, even messages we got from our childhood, and all sorts of things. And when I work with people, the first thing I have them do is connect with what's authentically important to them. And they are shocked by how much time and money they spend on things that they don't really care about. So first, I would have everybody really think about, what does being wealthy mean to me? Mm-hmm. Homework. I always have people start all my mentoring sessions, everything, by thinking about these three questions. First, if you had all the money in the world, money was never going to be a problem, what would you do with your life and your time? Second, you've gone to a doctor. It's terrible. He tells you have 5 to 10 years left to live. It's going to be a fast death, not long. But if you have 5 to 10 years left to live, how would you change your life? Mm-hmm. Where would you be? Who would you be with? And then the third, we go back to this doctor. We really don't like this doctor because he says, today, this is it. This is your last day. The question isn't what would you do, but it's what are your regrets? Okay. So really connect with that, and then you'll see, how am I spending my time, and the disconnect between what's really important to you. So step one, align your goals with your spending choices. Figure out what that number is. Okay, if this is what I want my life to look like, what's that really going to cost me? Figure out what that number is, and that'll give you the motivation. And then we can do all sorts of things to supplement and invest and grow that.
So you say wealth, basically, you see wealth as this holistic way of looking at money, not just money itself, but wealth really is just a tool to live whatever the fullness of life is for you.
I have friends who are from the Rockefellers to the Richmonds. Yeah. It's not money for the sake of money. It's just not the answer. You can chase that if you want. And when I started my career at Wall Street Journal Television, I remember interviewing so many incredibly successful CEOs, and I would ask them, do they have anything they regret? And they would all get the same faraway look in their eyes and say, I regret not spending as much time with my family. That's what sparked my interest in behavioral finance. So come up with your own definition of wealth and then put a plan behind it.
All right, so let's get more tactical. Mm-hmm. So the great American dream, right, mm-hmm. is home ownership. Mm-hmm. And even though, these days it's not looking, the dream is looking a little dreary. Yeah. It's looking a little nightmarish, yeah. Right? And so why is property still viewed for so many as like the way to access wealth. Is that true?
It is a great way to build wealth.
Okay.
But what did you just say? The great American dream. So we've also been told from the time we came out of the womb to own a home, that this is what you have to do to live the American dream. So I always tell people, step back and decide if buying versus renting is better for you. I have a friend, she lived in New Jersey. She was young, she was a makeup artist. She bought a home just like her grandmother told her. And she realized she was working 7 days a week to support the home, not meeting people. So she took that burden off of herself.
Okay.
But home ownership is a tremendous way to build wealth without question. And we're very attached to it because we've been told to. We have communities of color, for example, really overweight towards investing in home ownership because, you know, particularly for Black people, you were property once. So you have a very interesting relationship with property, and you've made it when you get real estate. And it's great, but all portfolios need to be diversified. Okay. So you have to look, am I putting all my money in the real estate market because that's what my people do, that's what I'm told to do? You still need a balanced portfolio.
So one of the things I'm seeing is that it seems to be that there are more affluent Black Americans investing in more real estate. Is that a trend that you're seeing?
It's very generational.
Okay.
So you have affluent Blacks, those who have net worth of $700,000 or more. They put the majority of their assets in real estate compared to affluent whites. That's all that conditioning we were just talking about. Millennials, however, 70% of Black millennials are invested in the stock market. It's a very generational. Baby boomers, not so much. Gen X, not so much. Millennials, 70% invested in the stock market. Black investors, the last 3 years in a row, have been the largest number of first-time investors to the stock market. That's because of technology.
Yes.
Technology really provided solutions that the government never figured out, financial services industry never figured out, by making accessible entry points with all of those, you know, with micro investing. And then,
like, I actually know individual people who move that needle. Like, shout out to Terry Ijama.
Totally.
Trade and Travel. I think
Yeah.
she had like 30,000 students, of course, Earn Your Leisure, you know, with their stuff. And so, like, there's just been, but yeah, there was this uptick of Black folks talking about money, but investing in a way that's never happened before.
And coaching and all of these things emerged. What was interesting is I've been a financial journalist for over 20 years. I was 2 when I started. I was the youngest baby on Wall Street. And I've been through many markets. I've covered every Fed president since Greenspan. And I saw this surge of investing, and I thought it was great, but who couldn't have made money in that bull market? Yeah. So what happened was when we had this correction, people had never seen a correction before. They start flipping out recession, all this, that, the other. U.S. economy was never going into a recession. So a good thing is that the interest is still there. You've weeded out a lot of people who were calling themselves experts, but really didn't have that background. Mm-hmm. And
as the kids say, they hit a lick.
Yeah, exactly, exactly. So, but here we are. It's much more natural for people to invest in the stock market, and that is thanks to technology.
Well, do you think that with all of that talk about the market, do you think you can even build wealth in a home anymore? Like, is it still a place for the wealthy to park their money?
Absolutely. Home ownership is great. But what you have to realize about home ownership is it's not a liquid asset. I own several pieces of real estate. I still, my late parents' home, I still rent out. And it's been a great investment, but I can't think of one tenant that there hasn't been a hassle getting the tenant out. If you get a tenant out, I've learned in the fall or winter, it's going to take you months to find another tenant. So you have to be prepared for all of those things when you own real estate. It's also, as a generational wealth building, it's a great tool to pass on a home. But I was in France this summer. I have some friends who live there. One thing I love that French law requires, we should really think about, when you buy a home, you have to buy a life insurance policy for the same amount, for the same value as that home.
I love that. I did not know that.
Yes. So think about things like that, because home ownership is great. It's not easy.
Yeah. It's funny because I bought my first property when I was 25, and I got my first policy when I was like 26 because of that. Because I said, okay, I have this property now, and I still had student loan debt.
Yeah.
And so I think I bought my property for $220,000. And so I got a policy for $300,000. It was like $30 a month because so
Yeah. You were young and healthy.
I know. Now my neck. But I feel like now that like homeownership feels so scary for so many people, because even then I lost that home during the recession. I bought it for $220. It went down. It's worth to $150. I was underwater. I'd lost my job. They snatched the house. And every few years, I actually look online to see has it ever gone back up to $220 or more. It's never surpassed $180. So does homeownership, I guess some people might be listening and really asking, this is maybe why millennials, are leaning more toward the market. Is that what you're thinking?
Well, they watched 250,000 of their parents lose their homes in the Great Recession. Home ownership is great. It just has to be part of a diversified portfolio, and you have to know what you're going to get into. One, if you want to buy a home to live in, am I going to stay here for at least 3 years? If you're buying it as an investment property, there's so many groups out there. There's real estate coaches, there's real estate clubs, there's so many things. People can collectively come together and buy real estate. I was just talking to a great Siam Ibrahim. He has Hero Homes USA. So they'll pick a property, and one student might have bad credit, one student might have a down payment, and they combine them. So there's a lot of smart ways out there to buy real estate. The stock market, the U.S. stock market, since its inception, has returned an average annual return of 9%. You're not going to beat that in many places.
Yeah.
So have a mix. Insurance. You mentioned life insurance. A quick wealth hack.
Okay.
Soon as that baby comes out, buy a life insurance policy in that baby's name.
Okay.
People often don't think about that. They think of it's morbid. They don't like to think about their child's mortality. But if you suppose you get the house, you get the life insurance policy, get the type of policy like a VUL, for example, that has a cash value in it. So, for example, my ex-husband and I got my son a life insurance policy. It's building cash, and that cash is investing in the stock market. So you can use that money tax-free to pay for college. He can use that money one day for a down payment. Life insurance is a really incredible investment vehicle, and we don't think of it that way.
What was the payment like on something like that when he was that young?
Oh, like nothing.
Okay.
He's 19 now. I was child mother too.
Not y'all being twins.
It is very low, and that's the reason why do you want to get a life insurance policy for a child? They are healthy. They might, God forbid, when they get older, if they get some kind of illness or something that makes them uninsurable. So that it's a really, really good thing to do.
Stacey, hold that thought, because we're going to take a quick break, pay a little bills, and then we're going to be right back with Stacey. You don't go too far, because we're going to be right back in a moment.
Don't move.
And we are back. Well, let's talk more about investing now that you talked about ways of the ways that investing in real estate may or may not be, there are some pros and cons, but let's talk about some of the pros and cons about investing in the stock market. So let's talk pros first. So stock market investing, why should we do it?
As I said, a 9% annual return. Right now, we're on the cutting edge of just a new way of life with AI and technology, and you get to own pieces of that. You can invest in the stock market in very tax advantage ways that you can take advantage of in retirement. It's really a great, great way to build wealth. The only con
I was going to ask you that.
to investing in the stock market is time. The pro and the con are both time.
Okay.
Stocks are a long-term investment. So I tell people have the majority of your investments in the stock market, like at least 70% of your investments in the stock market. The money that you're going to need within the next 5 years, keep moving it back. That's why keep moving into bonds, keep moving into treasuries, keep moving into other things. But there's so many ways to invest in the stock market. So my son was about 11 years old, and he told me to give him my debit card because he was opening an Acorns account. And I'm like, okay. And what that technology allows you to do is you buy something, and then suppose you buy something for $4.50, it rounds to the next dollar. It's going to take 50 cents and invest it in the stock market. So after a couple months, I looked at his account and he had about $1,000
Wow.
in this account. I'm like, what are you doing for money? And it was just this micro investing app. 15 years later, there's just $35,000 sitting in that account.
Wow. So
just from him investing spare
those
change.
returns, so what do you think would generate a higher return, or is it just time in the market or real estate? So if I'm just thinking about just returns, let's say long-term returns versus short-term returns.
I'm going to go with both.
Okay.
And I'm going to go with, when we first started, we talked about figuring out what your number is. And doing what makes the most sense for your number. Financial planning is nothing that should be taken on alone. So definitely get the right financial advice. And it's once you know your number and you know what you want, the investments make sense. You shouldn't pick, I want to make money and I want to own stocks for what? I want to build this legacy. I want to live this way. I want to live that way. Know what you're investing for, and then you'll know the plan to put behind it. But you want a mix of stocks, real estate, if that's what you love and what you're overweight, great, but it keeps some money. Make sure you build a reserve for those times. Real estate is going to cost you money at some point. Maintenance, turnover, that type of thing. It's not liquid.
Yeah.
And the stock market's a bit more liquid. You do have to ride out downturns. And so no, again, it's a long-term investment. And all the short-term trading and everything, it's really for the pros. Definitely for the pros.
So basically what you're saying is that, like, either way, you want us to just get into investing in some way, shape, or form.
If you want to live a comfortable life, I tell my son this all the time, make your money work as hard as you work.
Okay. So Stacey, I want you, the teacher in me is like, all right, if I was going to take some notes right now, I should have had a pen. Can you give me 3 very specific real estate tips? Because I know you say you own a bunch of properties and it sounds like your parents did as well. So give me 3 real estate tips for someone who's listening who might want to get started or has already started.
Find a community. A community I've come across recently that I really like is Hero Homes USA. And that will help you find all sorts of things that you would have never thought of on your own, such as distressed properties. The housing market might be high right now, but if you find someone who is having trouble paying their bills, if you find someone that's about to go into foreclosure, those you already build in that profit margin.
Okay.
So you will find that in your community. So those are 2 things. And the third thing I would do is, we are going into a very uncertain economic environment right now in terms of particularly what's going to happen with interest rates. It looks like we are going to run into some very inflationary policies. Rethink your adjustable rate mortgage. If you have an adjustable rate mortgage, we used to think these interest rates were high. They're not historically high. But if you have an adjustable rate mortgage, lock it in.
So find a community, look at homes outside of the MLS, right? And then rethink that adjustable rate mortgage.
There you go.
Okay. If I'm going to invest in the market, I feel like so many people are scared to get started. What are 3 ways that I can get started, or 3 tips to really start investing in the stock market?
Just like with real estate, finding a community to invest in the stock market. And my favorite, trade and travel. Terry E. Gioma, she'll teach you about long-term investing and short-term investing and getting yourself educated. Identify your financial personality. That's definitely the second thing. Some people are averse to risk. For example, in the Black community, we have more financial responsibilities for family members than anyone else. A lot of us are first-generation wealth. So what do you see statistically? Always the first to panic sell in a market. But knowing yourself, knowing your financial personality, because you definitely want to be able to get out of your own way. And second, the stock market's a long-term investment. So money that you're not going to have to touch within the next 5 years, all of it should be in stocks. Again, where should it be in stocks? Find that community. Yahoo Finance has great advice. You can come to my website, staceytisdale.com. We talk about these types of things. But above all, put your money to work. That is the biggest financial mistake I see people.
All right. So find your community, lean into experts, put your money to work.
There you have it.
I love that, Stacey. Well, I always like to do some sort of like breakdown, if you will, because folks are listening and sometimes people need me to just do a little wrap up, right? So you're going to tell me if I'm going to get an A in like what I learned from you today, okay?
Okay, I'm telling a teacher.
You're going to let me know we're going to get
telling the teacher, okay.
And then what I want you to do is maybe give us a little homework, about what we could do. Okay, so this is what I heard you say. This is what I've learned from today. That one, you want folks to invest either way, stock market or real estate. Right? And that the trends are showing that the older you are, the more likely it is that you are investing in real estate versus the market. And maybe the reason why many millennials are a little gun shy about investing in real estate is because they saw their parents lose their homes during the recession. And so they need more
so far.
Okay. But there are pros and cons for both, but it should not keep you out. That real estate is still a great way to grow wealth, because it's a great way to kind of park your money. And although there's overhead costs, there's mortgages, there are taxes, and if you are going to be a real estate investor, you might have to deal with unruly tenants. But overall, real estate tends to trend upward and tends to be a solid investment. And investing in the market that on average, the last 10 years or so, you're seeing returns 8-9%. And so like investing in the market is a place where you can have more access to your cash because real estate is not as liquid. And so making sure you have a diversified mix that aligns with who you are. So not just the money for money's sake. Probably the number one takeaway I took away from you is that wealth building really should align with who you are and how you want to live. Did I get it right?
Student of the day is Tiffany Aliche, and we hope that you all do that well in your life and on your test.
So what should our homework be, Stacey? What are you going to leave us with? And where can we find you?
Okay. Everybody go to staceytisdale.com for resources and for information from me. That's staceytisdale.com. And when you sign up to be part of our community, I also give you a free credit counseling session with professional credit counselor. What I want you to do for homework is ask yourself the 3 questions we started with. If I had all the money in the world, what would I do with my time? If I just had 5 to 10 years left, what changes would I make? If this was it, what do I regret? And really write down what the picture of your ideal life looks like and try to get a sense of that number. And you're going to start, just the exercise alone, you're going to start to see the disconnects between what you are doing and what aligns with who you really are, and then get some help in creating the financial plan to support that. But above all, figure out ways to put your money to work. Figure out ways to put your money to work unless you want to be working for the rest of your life, and you don't have to today.
And we don't want that. It's not cute. Thank you so much for coming, Stacey, and thank you for coming as well. It's me, Tiffany the Budgetnista Aliche, one of your favorite financial educators. If you need any additional help and resources when it comes to your money, don't be funny. Head on over to getgoodwithmoney.com and always tune in to Money Glow from Yahoo Finance. We are here every single Thursday, 12 p.m. Eastern Standard Time, wherever you like streaming and on yahoofinance.com. And remember this, if you don't do anything else, invest in something, whether it's real estate, whether it's the market, and definitely in yourself. Until next week.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.